and I'd like to ask my panelists to come and join me. Tao, Ethor, and Barbaros. Right, I was asked to do this morning, so I've not had so much time to prepare as my panelists. So I'm expecting them to help me through this session so that we make a success of it. We have about half an hour, so I will perhaps begin, if I may. Our panel is about what is the smartest capital, what is the smartest capital for fintechs from startups to scale up and then to exit. So we're going to be talking about the lifetime journey of financing startups, but particularly in the fintech sector. If I may begin, I'm going to ask my panelists each to introduce themselves for just 1 minute to explain and perhaps make one key comment that you'd like to say, and then we will move into the questions. Is that okay?
My name is Barbaros Özbugutu. I'm the co-founder and CEO of EasyCo. EasyCo is the leading payment company here in Turkey. We started the company 5 years ago, and we managed during that time to raise over $24 million, which is the second highest figure in Turkey after Yemek Sepeti. And we were born and raised in Germany. We moved to Turkey in 2015, and we go through all the stages of a startup. So we raised the first money from business angels, and then with our early stage funds. And later on, we managed to raise rounds from IFC, which is the World Bank. And there's a lot of experience and also a lot of challenges, which we can talk about later then.
Yes, my name is Ethor Jonsson, and I run mostly kind of accelerators, been doing so since 2008. But I'm also an academic at the University of Iceland and Copenhagen Business School, where we kind of talk about a lot of different issues about entrepreneurship and innovation. So I guess my contribution to this panel is mostly around kind of the general environment for startups. I would like to say I'm not a fintech expert as such, but I think it's an interesting journey for startups and a journey that is somewhat changing, I think, and something that we need to look at because of a lot of new innovations that are kind of changing the kind of funding environment, which makes it very, very exciting.
Hello everyone, it's a pleasure and honor to be here. My name is Tal Garih. I'm the energy planning manager of Alarko Holding, Alarko Group of Companies, which is a Turkish conglomerate. At the same time, I'm a faculty member and the chairman of the board of the Graduate Business School of Bahçeşehir University, which is a global university that has campuses all around the world. Furthermore, I'm a board member at an association called Yeni bir Lider, a new leader, and this is an association that is geared towards establishing a strong ecosystem of young individuals with tailored growth opportunities towards creating a strong leadership community in Turkey. All in all, fintech and this realm has effects and ramifications throughout the board, across the board, and we have to keep an eye on it regardless of what we do. I'll elaborate further a bit later. Thank you very much for being here. Looking forward. Thank you.
Thank you, gentlemen. My first question to you all is, what makes financing a fintech company different to any other sort of company? Shall we start at the far end?
I think mostly the difference is that you're normally invest in a regulated business. So normally fintech companies are acting in a regulated environment. So you have to take this in consideration if you do so. And furthermore, it's also very important that normally fintech companies need a longer time to get to the profitability, because the first years you have to invest a lot in infrastructure, a lot of in licensing, and then parallel build the business. But from a scalability and from a hockey stick perspective, normally this comes later on after 6-7 years. This is also something what you most probably have to take in consideration if you invest. And on the third part, normally what I saw, fintech founding teams are mostly more experienced guy coming from the industry, and knowing a little bit also the effects in that specific area. So I met only a few guys who were very young and started their first project in the fintech environment. So from that point, I think as an investor, you have these 3 points: regulated environments, it takes a little bit longer to ramp up, and a more experienced team, which is normally also a good thing.
Well, I think it's important to kind of understand this chain of action in terms of funding. We normally have this original phase, which kind of VCs like to call the 3 Fs, friends, family, and fools, which isn't true. It's a bad joke. It's usually it's friends, family, and founders. And that's the kind of the original of any funding of startups. The second stage is where we are here, and that's the business angels, kind of coming a little bit later in. And then we have kind of VCs, early stage and later stage. And then the fourth kind of is kind of exit more, where you have IPOs, where you have strategic acquisitions and mergers and acquisitions. So you have to understand this as a chain. And I think one of the things that I think is very often overlooked, and we base this on a research that was done with the Global Entrepreneurship Monitor, which is the far biggest survey done on entrepreneurship in the world. And a couple of years ago, there was an estimation of how big kind of the ecosystem was around funding. And it was interesting to see, on contrary what most people thought, the business angel funding kind of pool was 10 times bigger than the VC funding pool. And more interestingly was kind of that the 3 Fs, including the founders, was 10 times bigger than the business angel funding. So 100 times bigger than the VC round. And everyone thought that would be the opposite, that the VC, that's where the money is. So this kind of is interesting in the context of fintech, because as we were talking about here before, I think the fintech startups need more credibility because of the industry they're in, and therefore to create that credibility, you're more likely to see experienced people from the industry. So there has been, I think, a little bit kind of suspicion around kind of investing in fintech, but that changed very quickly, and we've been seeing that boosting. I mean, even though last couple of years that the amount of deals from business angels has been kind of gradually being lower, but still very strong in terms of VC, private equity, so it's still a booming market. And so I totally agree, it's very much around the credibility issue, maybe more than in other startups, and you would expect them to be also in some kind of collaboration, and I think that's also something that we've been looking at very much, is this kind of development deals with larger institutions, and we had a panel around that yesterday, and it's interesting to see that this has changed in terms of that we used to have such a suspicion in terms of collaboration between SMEs and large organizations, but that has totally changed. It's more like this cooperation, competition kind of thing, and that is also very interesting in this funding environment for fintech companies, because that creates credibility.
Thank you.
Thank you for your question. It's a very difficult question, and I'll do my best to tackle it in the best way in the time allowed, and I'll tackle it from different vantage points with your permission. Because we're focusing on fintech, right? And what is fintech? It's not just another buzzword. It's a key enabler to transform our businesses, whatever they may be. It's a game changer which has far-reaching ramifications which most don't even realize yet. You look at the 2017 data and statistics, and you look how fintech scores against traditional institutions, because that's the competition, the new disruptions that are in play. And we see that when it comes to value for money and service efficiency, fintechs are performing better. But when it comes to quality service, fraud protection, transparency, Traditional is still better on those points. So there's a way to go, but fintech is definitely a strong competitor, and we're already seeing those signs. And fintech, it's not just about technology, the tech side that everyone is focusing on. It's a cross-discipline, which makes it particularly challenging, and I'll get into it in a bit. But in general, I think that the fintech industry can be classified into two main domains, and this is important to understand how the capital flow and the financing should go about throughout the life cycle. So these two main domains that fintech could be classified into are dumb and smart. Let me start with the dumb side of fintech. What do I mean by dumb? Automation, robots, iteration, a lot of repeats, right? In fashionable terms, I guess most of you know this, these are RPAs and APIs. Robotic processing automations, application programming interface. Everything today is getting disrupted through these RPAs. Look at Turkish Airlines website. Through all these widgets and robots, its performance, its optimization is getting better by the day. So these tools enable all of us to do basically everything in a cheaper, better, and more precise manner. And this increases efficiency, overall efficiency, but it's somewhat boring. So let's get to the smart side of fintech. Here we're talking about AI. We're talking about optimization, prediction, and the hardest thing, anticipation. Through machine learning, through deep learning, the smart is continuously getting smarter, and disruptors are getting disrupted. That's how fast change is happening in this domain. So to further development, the smart realm that shows a lot of potential, a revamped human resource pool is a must. Without a human resource pool, we cannot do anything. And currently such talent is scarce, which hurts finance, which makes it difficult, especially in Turkey. Capital investments are difficult, and there's a vicious cycle. You see a few VCs in Turkey, or a few VCs in the fintech domain, and you see a few exits. But you need an innovative cultural shift to transform Turkey so it can grow in this domain and create further positive feedback loops. But these things don't happen by themselves. You need public policy, you need cooperation of different stakeholders in the ecosystem to jumpstart this issue. I'm talking about collaboration between governments, NGOs, the private sector, the academia. As I said, I'm a faculty member and the chairman of the Graduate Business School in Bahçeşehir University. And we see this challenge actually as an opportunity, and have already integrated fintech and other Industry 4.0 classes into the curriculum, and are currently completely revamping the MBA program to fit the needs of the future and enable innovative thinking. But for this, we need angel mentorship. For this, we need angel accelerators. So money invested actually becomes smart money. Because we see a lot of investors not having a good fit with entrepreneurs. They may be self-made people. They have made their own exits in whatever industry they have performed before. But these companies, these industries have different DNAs, like different animals. One is an elephant, the other is a cheetah. So they require different tailoring. So you look at the life cycle of the financing, crowdfunding platforms, accelerators, personal finance, friends and family and fools. All these carry the fintech business to the angel investor. But then the angel investor needs to provide smart capital in order for the venture to reach the PE levels, the private equity levels, the $10 million benchmark. And to get from the 2 to the $10 million benchmark, it's not easy. So global angel investors need to mentor our local investors. At the end of the day, only through these kind of collaborations can we really make it. And with your permission, just another minute. Many entrepreneurs in the fintech ecosystem in general have a hard time even placing the money invested, which is why, again, smart money and networks are crucial here. You lose great business, you lose great people, you lose opportunity due to this misfit and lack of smart money, which is in sorts like parenting, and it requires constant care. But in particular in the fintech arena, we see a very, very difficult exit. Exits are difficult, which makes this even a harder vicious cycle to escape from. Products may potentially become too valuable to wish to sell directly, as the applications are always endless, right? It can die prematurely, the venture, can be disrupted very quickly. It carries a high risk premium at the end of the day. High volatility in the life cycle can challenge track records, make it hard on institutions to get into the game. Hard to keep the teams together, it's a cross-discipline. Finance guy and technology guy don't speak the same languages, and it's all about the team at the end of the day. The marketplace is immature and, in a sense, non-descriptive. The technology is very novel. Regulatory frameworks are challenging institutions in particular. So again, the local know-how is crucial, but the global perspective is even more important, and you need to get these two to work together. Because again, fintech will not only disrupt the financial system, but industries across the board. New ways of raising money, blockchain technologies, CIOs, as the gentleman said before. I'm sorry, I'll cut it here.
That's okay. It's rather remarkable. We've just spent 15 minutes answering one question out of a half an hour panel.
Okay, so just to finish this note,
One more sentence.
just to finish this note in a nutshell, we need public policy, we need ecosystems, we need regulations, we need education, all to work jointly towards the same goal. Because culture doesn't happen by itself, and all these elements feed one another to have a healthy ecosystem in place, which I guess is why we have this forum, which I think is a great step forward. Thank you so much.
Okay, thank you very much. Right, now I'm going to limit you all, because you all talk too much. And we can't therefore discuss the other themes. Okay, so I'm going to ask you for quite short answers. But firstly, I'm actually going to ask Dusan, could I just ask you a question? With ICOs, do you think fintech companies which are heavily regulated are suitable for ICO, which is at the moment a fairly unregulated market? Yes. Okay, yes from the back. Excellent. Dusan, do you think yes?
I think it is possible. He said maybe.
Possible, but maybe not ideal at the moment.
I think it's possible, but more work needs to be done on this, especially the legal costs will be higher. It's the lawyers for the job.
Ah, the legal costs. Any lawyers in the room who are touting for business? No.
Precise number could go up from 50 to 100,000 to I think 45,000.
Okay. Thank you. Right, so reverting to the areas of finance where you'll be more familiar, and I want very simple answers. Do you think you're better off with small sums of smart money repeatedly, or one larger sum, or a very few very large sums? And I want literally one-line answers. Shall we start in the middle?
In the middle.
Yeah.
That was a surprise. Okay, I think one of the things that is very important is you try to
Maybe
limit.
you have one sentence.
That was my long sentence.
That's your one sentence.
You try to limit the risk.
Okay.
So in many ways, kind of lesser amounts in a longer term is a way to limit risk for business angels.
Okay, so you're on lesser amounts over the long term. What do you think?
I think it depends who the people are. If you have the best fintech investor as an institution, then I would go for that. But if I have 6 CEOs of different banks as business angels, then most probably I would take this. So it depends a little bit in which constellation, who the people are, and you have to take it case by case and decide that.
Okay, so that's a very good compromise answer, which
I
hasn't
know,
told us
very
anything.
political.
Case by case, okay.
In one sentence.
In one sentence.
In one sentence. Look at, it's not about one or many. It's about being smart. Look at Nordic countries, look at Israel, look at startup nations. They have a strong ecosystem with the right players, maneuvering the venture and giving capital when needed across the board. So we need to look at these examples. Thank you.
Okay, all right. So we're not really nubbing it down. I think the best answer is case-by-case analysis, which isn't quite a solution. It means you'll have to seek advice. We're very short of time, so I'm going to rush through. Do you think financial companies, fintech companies, they are about finance, should they be offering equity or debt to investors, equity and debt? What do you think? Just give me equity, debt, both. What do you think?
I think at the beginning you have to give equity because most probably you will not have revenues or not the right setup, financial setup to
so I'll
get
slightly
there.
qualify this. If a fintech company is going to get big quick, which is what it's meant to do, because that's by definition, it should become very cash generative quite quickly. So,
It
does
should,
that change your opinion?
and then I think you have to reconsider and take debt as a potential financing channel there.
Okay. What is your view?
I say what he said.
You'll say, you're going to
I'm
agree with
trying
each
to
other.
save
That's going to
time
make it even quicker to the end of the panel. Okay.
I think that this is a very crucial point, and it's all about the deal, right? It's all about reaching the right deal that is a win-win, because you need to get the right valuation, you need to get the right incentives to retain the talent, to split the pie in a way where the actual know-how and those that have the IPs are able to, continue to run, but also the investors are happy. So, in one sentence, I would like to give you a SWOT for fintechs and capital allocation. This is called the POCDF framework.
That's not one sentence.
POCDF framework. People, opportunity, context, deal, and fit. Once you get these 5 right, it's not about debt or equity. It's about having the right formula to satisfy all the players in the venture. Thank you.
Okay, thank you. Moving on into the sort of scale-up side and exit side, do you think that corporate venture companies or big corporates, particularly the fintech space, will they smother new fintech companies either by trying to do business with them or by trying to invest in them, or do you think they're actually genuinely open-minded to collaboration? What is your view?
From my own experience, I think there are companies who are open to that. So we are having corporations with really big companies like WorldPay, Adyen, and all of the international big players. They are open to corporations. Then there's a banking world where the cooperation is limited. So we have to see if there is the huge players in the payment sector who are 20 years ago, they were the first fintechs. I think they're more open for cooperation than the banking worlds. At least in Turkey, it's like
so
this.
The fintechs who are established are actually quite good partners of new fintechs, but everyone hates the establishment. Is that fair?
Hates is a little bit hard, but yeah.
Distrusts,
Yeah.
I don't know.
Yeah, I think, we're seeing very positive kind of development in collaboration between startups and larger institutions. And I'm not all for the larger institution taking equity for it, but some kind of other kind of incentives. And we've actually done that in effort kind of giving them rights to the technology for a certain time rather than equity. But we're seeing in just the last 2 or 3 years a huge surge in corporate venture in the fintech sector. So they're very, very positive towards investment in the fintech.
Although there is progress on the institutional side, you still look at most institutions 5, 10, 20 years, they don't have a strategic planning outlook. And this is a problem. And you need a few platforms to utilize, like big, like Apple, like Google, to utilize its technologies, to create, again, positive feedback loops. I have a very good friend, worked for years in the American banking industry in the States and does electronic trading there. And he wanted to bring this, digitizing capital markets, to the İMKB, to the Turkish Stock Exchange. Tried to get funding from different institutions, knocked on everyone's door, to no avail. Eventually, Koç Holding and Yapı Kredi funded him. So we need more visionary investors like those to jumpstart this win-win potential collaboration. Thank you.
Okay, thank you very much. And lastly, because we have got 3 or 4 more minutes, but I'll take some questions from the floor. But again, is the best exit IPO or trade sale? Which is the best for fintech?
I don't know. It depends. I think IPO in US, that's always a good deal, or mostly a good deal. IPOs in Turkey, they're starting, it's new. So it depends on the market where you're acting, the region where you are, the stage when you want to sell the company. So it depends a little bit, but I think I like it that in Turkey especially, IPO is getting an option. 2 years ago, I would never think about that. But actually, we're coming to that point that there are a couple of very, very good IPOs in the last months. So for that, it's getting an option also in Turkey, and I like that.
Okay. Tal, do you have a particular view? But very quickly.
Yes, of course. I think that, again, it's all about getting the right investor that can get you into the right network, into the right ecosystem, that can make that money turn into smarter and smarter and smarter money. So it's about creating the right fit, not only monetarily, but strategically. Thank you.
Thank you.
Well, what we know is in the fintech sector is something like 80 to 90% are kind of strategic investments, and only kind of 10% roughly around IPOs and kind of mergers and acquisitions. So IPOs hasn't really been an option, and maybe it's changing a little bit now. Maybe there is a kind of surge in that, but traditionally for the last couple of years there hasn't been any other option than strategic acquisition.
Okay, so we're still in a market where trade sale. So ladies and gentlemen, does anyone have any questions for our illustrious panelists who do know a lot about this subject? Dusan.
Mm-hmm. Yes.
Yeah, we can hear you.
Work with from your payments company?
We looked in, we love both companies, by the way, because they're doing great. I think they're in different stages of the development of the digital time. PayPal was the first mover, and they had a kind of a first mover advantage, but at the same time, they did a lot of things right, growing the business in the eBay world, going out and then scaling outside of that. I think this was a good strategy, and if you see, even Alipay has the same world, grown in a closed loop and then going outside. Stripe is a little bit different. They have to fix a real problem. So from a technology perspective, I think Stripe makes a lot of sense in US, where the infrastructure is not, from a technology perspective, not state of the art. They will have some issues also in Europe, what we see if they go outside from US, because then your value proposition shrinks a little bit. So in our case, what we are seeing very clearly is that Turkey is actually starting in the digitalization phase, and we have 2.5 million small businesses, and only 1.7% of them are selling online or digitally today. So there is a big wave to come, and what we want to play, we want to be the payment enabler of these small and medium-sized merchants. What PayPal did 20 years ago in the Western world, this is our goal to do that for Turkey. And we see that we have some challenges, because what we figured out was that the digitalization of the Western world happened 15 years ago, and we're doing that today in Turkey, but we are using the same tools what the Western world used 15 years ago. So you need an email address, you have to go to marketplaces, and you have to open up a website where you can sell stuff. But today you digitalize over social media, over your mobile phone. Therefore, we're building now new products like a link product where what you can push on different platforms and sell stuff. This kind of new innovation is needed to increase the pace of the digitalization in Turkey and in this region, because the tools are not the right ones for the world of today. So therefore, I think we have the same opportunity to grow the business here in Turkey, but we have to create new tools.
Okay, thank you. just a quick comment, and then I'm afraid, would you like to say anything in particular? Are you sure? Just a few comments, and then we must move
Okay,
on.
just related to that, and remember I was talking about the three Fs and how big a pool of the ecosystem that is. I'm all for kind of these democratizing investment, and ICO is part of that, because it totally changes this world. This group, which is the basis of investment in startup, has been disregarded, and we should have some approaches to limit the risk for these people, because those are the most important people. They're taking the highest risk and are doing the most of the labor. So it is great innovations that we're seeing now.
Thank you very much. I'd like to thank you all, gentlemen. It was a really difficult area, and you handled it brilliantly. Thank you very much. I'm now going to ask you to leave the stage. I'm going to leave the stage too, and ask our new panelists for the next session to come up. Thank you.